This conference will now be recorded.
Okay, as Peter here, we're talking through charts this afternoon. Just going to explain some of the setups for some newer members and just go over, what the indicators are, how they work, and then what I'm seeing right now on the charts. So, Ted was asking, you think this is about to roll over and get short? This is a long setup, and you can see the green bars actually. We're already starting to see a little bit of buying come in, but the tape is good today. We are over the white line here. This white line, you can follow my mouse cursor here, and this VWAP here, the blue line, right? So it is pretty bullish already. And what we're seeing, is all day long, these little dips here have just been we've just been getting bought. When these blinking crosses, the bars here start to turn cyan and blink, that's a long setup for us on this 3-minute chart. When they start to turn purple, which is right up in here, that's a short setup for us. Now, obviously, this short didn't work, but we were just explaining that a little bit earlier, that we would have seen as it was coming in here a pretty decent sized negative divergence where we made a new high in price. The indicator went under zero and has made a lower high in momentum. So we're getting ready here to want to short it. And I was explaining, you probably don't want, at least on a tape like today, and as strong as we've been over the last 2 or 3 days. So you got some context with it, and you'd say, I probably don't want to just be dumping my entire position short right now. I'd like to, I like to leg in, so that if I'm not right, especially if the momentum is really high like this, I would say you probably enter one in here, and then you're watching to see if this rolls over, and you enter here when it rolls over, and you think it's going to go down, but then it stops doing that and it goes back up. You go, uh-oh. And this is actually set up for a long, pretty good, and it's a failed divergence. So you'd be ready to go long up here if you were just playing the long side. So let's just say you were short, and you go, oh boy, now it's going against me. A lot of people will want to put stops right here, right up at the top, and it can. That can work, I guess. But it's really obvious, to be frank, when you see this and it's an M setup, you would expect it to come down. There's the first leg of the M here, second leg down at VWAP, and then we're up here, and you think it's going to fail, but it's failure to fail here, which can often give you from failed moves come fast moves kind of thing. And we got that here, but we also got it. It wasn't like straight up either. So I was saying, I like to leg in. I would put 1/3 in, put 1/3 in up here, and I'd be using these ticks down here to be adding. When I see it hit this +2 to 3 sigma here and here, and if it got up there, I would be adding on that these bars that got up here, or if it got overbought into these ATR bands here, add, and then if I got 3 in, I'd say, okay, that's all I can do, right? I'd say 1, 2, 3, and then if it rolled over and came down here and touched these cyan bars right in here, I'd be covering, and that trade wouldn't have gotten me much. In this case, it would have been barely a scratch, and I would have had to probably take some heat for it. But that's what happens if you're trying to short a strong tape like this. Oftentimes you can struggle, trying to really push it down. But right now we have a long setup there, and it's pushing up. And so like what I'll do is I'll go over, starting now. We'll just go through the 3-minute chart first. I'll just go top to bottom, and then we'll swap over here to these OTF charts, and we can talk about what they're doing. So the obvious thing that you see on the screen now is the blinking cyan bar. So it's a long setup, and so we would expect it to go up. And on something like this, given how tired the move has been, and we have this pushing up, I might be inclined to just take profits at the old highs up here. You got this move up in here, maybe even just the DMZ line, the green line. It can often act as resistance, this green line right here. Okay. So what are these dots? These are just a band that Fari has put around these green and red lines. And it's just a certain number of average true ranges away from these green and red lines. So when we talk about, setups, the first simple one you can trade is just the blinking. Long when these get to be blinking cyan, short when these get to be blinking magenta, right? Or that's your setup. That's not your trigger and your follow through or anything like that. But it's just telling you to be aware of a turning point, right? So underneath that, well, actually, this green and red line is our DMZ. So this is just a trend indicator for us. It gives us our bias. And you say, well, why do you want to take a long here if this is crossed over and the red line is, we've had a cross right here. And you can see that right here. This is the histogram for this green and this red line. This is the DMZ difference right here. You see my mouse cursor, it's the third clip down. 1, 2, third clip down. This would be an indicator for primary trend. So if you want to take longs while this is up on the 3-minute chart, great, you can do that. If you want to ignore longs when this is down on the 3-minute chart, great, you can do that. Like it's up to you. You don't have to take this long, even though it looks good right now, right? You don't have to take it because you say, okay, my trend indicator is telling me is no. There's a couple different ways you can use to define trend, and we'll talk about that in a little bit, but this is the simplest, easiest one is the 3-minute chart with this histogram greater than 0, and you can stay long, and it does pretty good. Second clip here, this is Fari's CI indicator, and it is a much more sensitive version of the DMZ, right? It's the DMZ is the difference between two different CIs, right? So it's kind of mind-bending, but this is a very simple trend indicator as well, and it's also a good momentum indicator because it's basically a zero lag version of the MACD. It's actually not the MACD, the True Strength Index is what it's based off of. So this is, this is something where, you can take the crosses up where you see this first green bar print right here and ride them up until it's overbought. So you get into this condition where you start to see magenta bars. You could say, okay, I'm bailing. That's something that you can do, especially on a good day, with the tape is good. And it gets overbought and it turns red right here. You notice this color change right here, and it'll tell you when it's overbought. And Fari's got a couple horizontal lines right here that show you when it's overbought too. Same kind of thing. I don't know if we can see it oversold. Let's see if we can find an area where it's oversold so you can see it turn green. It's been a while. Hasn't been oversold in a while. There you go. So this is it turning green right here, oversold. So it'll tell you when it's overbought, oversold as well. In general, what you're going to see is stuff like this. It'll get turning red, and you'll see the purple bars, right? And you'll say, oh, this is all overbought. All of this is overbought. Okay. So now we're going to go down there as the third clip, and I'll go through these two. I explained earlier what these two lines are too. This white line is our MBS, market-based stop, and the blue line is the VWAP. Those are just this is my favorite level of support and resistance for day trading, and this is my favorite type of day trade right here. So if price comes down, I either get cyan bars or I get the CI right here oversold, and I can catch support right here on the MBS, the white line, and the VWAP, and I play it to the long side and try to catch it and run it back up to get overbought. That is a good chart on the 3-minute setup, and you could trade that correspondingly if you wanted to say, okay, well, which one of these OTF charts is most similar to the 3-minute? It's the XL right here. It looks a lot like the 3-minute. It's not the same, right? So you can see it. This zigzag here, and here's the spot on Excel this morning where this event occurred. And you also have confluence here. See these blue, cyan crosses right here, it's another indicator Fari has to show when the momentum to the downside is tapped out. So you always want to stack things in your favor. So when you're taking a trade, you just don't take every single, let's say you just don't take every single cross up in the CI indicator. Like, that's not how to trade. You want to stack a setup to show when you have support. And so you get oversold here, you get oversold, let's say, over here as well, and you also have support in the VWAP and MBS. It's a good trade. That's where the odds are in your favor, and you know you have edge here. So you're just waiting on either this to cross up and make a print a green bar, or the first green bar here. This would have been probably like about right there, so you can see it. It would have been this bar right here, and you could have rode that until that got overbought. With those are magenta colored, pink, whatever you want to call it, dots as well. And you see we didn't go much further after that. Most of the move happened between then and there. So that's how we would use, you know, at least the setup and the MBS and the VWAP. So this clip down here, this third one, this is a 5-minute chart right here. That's what Fari has set up here. He also got 5-minute tick Q on here. I think he means to make these 3-minute, but we'll he was talking to me about that yesterday, putting it on 1 minute at one point, but I don't 1 minute too twitchy. And what you'll see is horizontal green and red lines right here. These are also levels very similar to MBS and VWAP. These are levels you can trade against. So these are just support and resistance pivots. And so what we like to trade, one trade we like to do here is a breakout over the first hour high low, right? And plan for this other dotted line. So like in this case, we're still in this, we would still be in this kind of trade. But there are good odds that once you break out of the range on the first hour high, you hit this dotted line. And same is true breaking the low range of the morning right here, this solid green line. You go down here and you can get to another level. So this is just support and resistance for us as well. And you'd play them exactly the same way that you would play a trade that would be, you know, and we would be playing longs because the trend is up now, but you'd wait for it to pull into support and then you would buy, right? Like, you know, you come around here, this kind of area, and you could buy, or you come down here and it's almost there. I don't think it quite got there though. Down to 193. I don't think it did. The low here. 200. So it was within 7 handles. That's not too bad. But you can see how how oversold it got here too. So that's just support and resistance. And then finally, we like to look at the ticks. And I'm a big fan of the tick indicator, tick and tick Q. I use tick and tick Q like people would probably use the tape. Like if you were watching order flow on the dome or the tape, and you would be capable of looking to see when things are extended. So we put bands on that. And anytime we get in within this big solid red line and this big solid green line down here to the bottom, in that big green line right here, the solid one, in between that and the one that's above it. So that's -2 and 3 in terms of sigmas. You start getting into that area and you're looking in the green side of things, you're looking for longs. Okay. So the opposite side of the equation, let's say we're long right here. Here's a good example. We're watching this. Look what the ticks are doing. We are well within +2 to +3 sigma. This is an area where if you're long, you are taking profits. You have magenta bars right here, pink, pink, pink. It's telling you to get out, depending on, what time frame you're trading here and here, right? But it's telling you when things are heated. And why do you want to get out while it's going up? Why don't you wait until the momentum indicator turns back down? Well, your fills are going to be a lot better selling up here at the highs. And we're not trying to catch some enormous move. This is already a pretty good move off of this. Let's just say you got in, I don't know, you could have picked this to get in. You would have gotten in, what was that, 225, something like that. It's 246 now, so that's like 20 or 25 handles. That's not a bad trade. And you could have gotten in earlier with mediums here. Let's say the first cross up is right here, right there. So you would have been in at about the same, 225. So, and something else to look at here are these sigma bands. So these bands are the same bands that are on the tick queue. You see this? And we can see we're at 400 right now. We're really getting revved up right now. We are just about to hit this big top band plus 3 sigma here. You can use these bands as places to take profits on the long side here, because you can see we usually hit them and pull back, hit them and pull back, hit them. We went sideways here. We didn't pull back, but that's trading, right? The other thing we're looking for on these bands is support when we get down into -2 to -3 sigma. So this is also telling you this is a long setup on these mediums. I have blue dots, crosses here. I'm down into -2 to 3 sigma. So I'm looking for mean reversion to the upside. Right, like right now, I'd be looking for mean reversion to the downside. Or at least go sideways, right? So you can see the dots there. And so if we're looking at this bottom piece, the bottom portion of this is a CI indicator. It is the same CI indicator here. It's just applied to these individual panes here. And there are 1, 2, 3, 4. And we have another broadcast on Zoom that'll show more, versions of these. But you can see basically these bars in each pane reflect increasingly larger trade sizes. So this is a very small block size of trade. So this would be a certain number of contracts, right? And they're all parsed out, and they increasingly get larger and larger. So this is a trader that's trading larger size than the mediums. This is a trader that's trading even larger size than the largest. This is the big whales. So it increasingly gets smaller. What I like to trade is medium, right? And I like to use this as the primary kind of trigger and kind of monitoring device for the trades. I might look on the 3-minute chart and say, hey, I'm set up here, let's say down here, because I got cyan bars. Let's just say, that's what we were doing. That would have corresponded roughly to here. So I would have been set up here because I had cyan blinking, not blinking, but cyan colored crosses here. And I knew that I was pretty oversold here. The other thing I'd be looking at too is this indicator. I like it to come down here, and one setup we like to trade too is a tap of the 0 line, because this area is usually kind of an inflection point for whether or not the trend is going to turn bearish or bullish. So what I'd like to do is look and see what is the response when this touches 0. And I know if I'm already oversold here, I'm already set up long on the 3-minute chart, and I'm touching 0, I'm really liking that we could pull up and run up again. Now, you'd say, okay, if you think it's bullish, then how are you going to trade it? What are your stops and this and that and the other? I'm not a big fan of static stops, meaning like, hey, I just decide to buy it here and then I put my stop 20 handles underneath it. Fari trades oftentimes with a pretty standard stop, like 20 or 30 handles typically. I typically use the indicator as my stop. And so what does that mean? That means I am not going to buy it until I see a green bar. And the reason I can do that is because I know that Fari's indicators are zero lag, right? They're going to give me the best chance at still getting close to the bottom without having to catch a falling knife. And so what does that give me? What does that tell me? If I'm buying that first green bar, which would be right here, I already have a stop. My stop is the first time I see a red bar. So let's look at one that, I don't know, this isn't even set up right here, right? Let's say this cross, this first green bar right here. It's not set up, but meaning there's no edge to this cross, right? You want to take crosses where you see edge, where you've already seen a setup, okay? So you would take this, right? And you would be out the first time you saw a red bar. So you might be in there and out there. And the good thing about taking these crosses up and not trying to anticipate and catch this down here and buying it down here, now you can definitely make good money blindly buying down here when you see support right here, right? You can do that, but I don't advise anybody who's just starting trading and learning how to do stuff to be trying to buy stuff that's still going down, if that makes sense to you. Because oftentimes you get people that are trading, they're just not comfortable with knowing how much to trade. They might enter their whole position in down here instead of just doing like 1/3, 1/3, 1/3, or they don't know how to use like they don't have like a well thought out, like how am I actually going to manage this trade stop wise. So it's easiest just to have the mental, like, where your stop is when this green bar happens. I have a green bar, next red bar, I'm out. So when is my profit? When am I going to take profit? It's simple, clean. These rules are simple and clean. So you're going to take profit. You're going to take profit when you see one of these bars, or not bars, but dots. So like we just got one of these dots up here. You can take profit when you're hitting these bands, this 3 sigma area, plus 2 to 3 sigma. You can take profit when you see tick Q here, get into 2 to 3 sigma. You can take profit when you get into like a plus, I'll call it like 13 to 18 kind of range. And sometimes it's pretty simple because you can look backwards and see how high did these bars get before it rolled over or it went sideways. And it's about this area. Am I right? So if you're entering here and you got this long trade on and you're already seeing this magenta bar, not bar, but I keep calling it a bar, it's not a bar, this magenta cross, you're seeing that the histogram on the medium is already at a level where it's typically reversed from the past. I had already a bunch of high ticks. I now have already seen a really low tick where somebody did sell into this and then it just got bought again. But it's already red right here. This bar is red. And you can see that the ticks are actually plus 126 or so, 130. They're still positive, but this is an area where you want to be taking profit on a long. So now we're talking how would you set your trades up, and when would you trade long and when would you trade short, right? I use 2 panes up to kind of give me my trend. So if I'm occupied trading medium, right, today because it's working, then I'm gonna skip two blocks up, I'll call it. How about that? If I wanted to trade this large one here, then I would skip to Excel. And what I like to do is I like to see this blue CI line. I like to see it over 0. If it's over 0, then the trend is up, right? And you can see here we did dip kind of under it. Here's one that's a pretty decent sized dip right here. But for the most part, it catches the whole trend. Like let's draw just so you can see visually. Something like that. So that's the downtrend, right? Because it started to go down. And then when did it start to go back up? Say like right there. Right. And now it's back up, right? And you get a little blip here, you might say, between here and here. But it's basically up until here. Right? About right there. So from here to there, you can take long signals, right? And you'd be taking long signals over here. Okay? So right now, this is all over 0. I would have taken this long trade right here, as we were talking about it. And that's because I got the trend up, right? And you could do the same here if you want to trade the largest, like you would have just entered, like right. It would have been really extended up here. But you could do it, you could enter thinking that this is going to go higher. I don't trade the largest typically, but that's something you could do. So anyway, just to recap again, I use this as the trend, right? This blue line over and under 0, and it just went over 0 here. I'll mark that one more time, and there you go. So the trend's been up since this bar right here, roughly, and this was our pullback. And so, how many trades would you have gotten in here? Do you take every single one of these crosses up since, let's just say that, what time roughly did this occur? 11:20. Let's just say that would have been here. Okay? Roughly. Do you take every single one of these? No, you don't. And that's, I think, sometimes what people want to do. And you can't, no indicator works like that. You can't just use this and take every single one of these crosses and consistently make money day trading. But what you can do is know that the trend is up and I'm looking for a setup. And what does a setup look like? It looks like this. We try to make it pretty clear. These cyan dots, cyan bars right here, that was the trade. So in my opinion, and during this up leg here, we've had one good trade here. And it worked up here. Now, they don't always work, but this one worked on the way up here. And you can see here, we're starting to see some selling come in. This is a tick Q. And these candles up here are getting skinny. Skinny candles down here usually ends up being a trend change. Back down, we'll see. To the downside. So that's about it. I don't know if anybody's got any other questions, at least for the indicators. Does that about sum it up for everybody? So, good. That's good. Now, I like to keep it pretty simple. So, just to recap, you're looking for cyan colored stuff. And you want to take your longs when the trend's up in the bigger time frame. And if it goes down, you can take your shorts. You know, what you would think is if you would flip these screens upside down, you'd be shorting when you were getting magenta bars. You'd be shorting when you are getting magenta colored crosses, but you're only going to do that when the trend is down, which would mean that these this CI indicator was under 0 and falling. You would have a DMZ under 0. You would have price underneath these two lines, the VWAP and MBS, and you would have probably this 3-minute CI as well. Is gonna, the physical green line is under 0. So that's how I would say most people should trade. Now you might say, I want to short this here. Let me short this here, because we do have a lower high kind of developing here. And at some point in time, this does come down. But again, we just tried to short it here, here, and here, and we didn't get really squat. This little piddly pullback. And it was a much more profitable thing to take the long. And that's why I'm a fan of just deciding what you're looking for and sticking to it, and not trying to take and trade every zig and zag that this thing does. If the tape is good today, like it is, lots of stuff short squeezing. We're still got. I mean, it's just good. We're going up. So I mean, why you want to worry about catching 10 or 15 handles trying to short the tippity top of this thing? It's very difficult to do. Much easier when you're shorting. It's just falling really fast. And in general, shorting is a little bit harder than going long, because you can also, if you screw up, you get bailed out a lot easier trading on the long side than the short side. So. Peter, the low line on CI is red. What is it indicating? Let's see. Are you talking about this? On the 3-minute chart, you see it just turned red right there. That right there, it's underneath. That indicates that it's overbought. So you'll see it turn red right here as well. That indicates it's reached a level of overbought. And it'll turn green when it gets oversold. So you can see this is also happens down here. This is green right here on the medium, looking at the bottom left-hand quarter of the medium one. And then you'll see it turns red up here when it gets overbought as well. Like it's just turning red now on mediums and it's overbought. Just another visual indicator of overbought, oversold. I use the lines personally. I like the lines. I think the lines themselves, these two horizontal lines, work better than just the color. But the color is a nice visual cue for when you're getting in that area of overbought, oversold. So there, you have a lot of different ways to tell if price is overbought or oversold. And in order of importance and like what I use in my trading, I will use these dots or crosses. That's my number one. I will use these 3-minute color changes here and here. So that's my number 2. And then down here will be like a pretty distant third in terms of overbought, oversold. Though I will, if this thing starts to get in the 25 region, because the nice thing about this indicator is that it is normalized. You're not going to see it get outside plus or minus 25 very often. It will. It can get up to 30 or 40, but It's not very often. So there's something else we're seeing. There's a yellow dot above the bar here. A lot of volume just came in right there. That's what that meant. My guess, if I had to say, is that was a huge sell program right here. Big red tick Q bar. We just saw a pretty big buy program come in and gobble it up too. Oftentimes you can get good trades just watching the tick Q down here, because you can tell when program trading starts getting kicked off. All right. All right. If there's no more questions, I'll stop the recording.